Hi, Warriors. Profound weakness in the dollar the last 48 hours or so. Definitely no safe haven bid, and even yields popped yesterday. No impact. That being said, I wouldn't chase, um, the long side of euro and FX right here. 104.5 was also an area, and we'll see. Hi, Scott, Ingmar, Bran, RC, how you doing? Hi, Kman, Glenn, Steve, and RJP, James, Ryan's here. The whole team's here. How you doing, boss? Okay. All right, sun is
Good
shining.
morning, coach.
Hey, how are you? Are you? Is that your Wolfman Jack?
Uh,
Anyway, that's how I felt when I woke up this morning.
yeah,
Anyway,
I know. Sometimes I feel like, geez, man, it's early. By the way, I'm going to be on your time zone next week, so I
uh,
can now start to feel as bad as you every morning.
yeah, you can now empathize with me. So,
Yeah, I will for sure.
anyway, I thought I'd start with the TLT, which I think is putting in a high here. I don't know if it's going to be a bond crash. You know, some people are saying this whole rally was a four, but why not? If you're bullish bonds, maybe we pull back and put in some kind of right shoulder down here. And we've had weakness in the stock market. New regime, everybody. Weak market, weak dollar. I think it means outflows now. That's a difference. That being said, you know, I wouldn't be surprised if we get some kind of pop from here. And this 5,700 level, that's a black line. It's kind of like a line in the sand on S&Ps. Uh,
Did you notice,
right
it's,
there.
did
Yeah.
you notice, Coach, on Shoot, you don't have it. If you draw a trend line across, so that right in the middle of your chart, that low, and then draw it across the bottom. Yeah,
Uh,
just draw a trend
all
line
right.
from
Uh,
there. We broke this trend line yesterday, right? So
yeah.
if you take that, and yesterday, right at the last half an hour of the day, yeah, just keep drawing it. Yeah, just go all the way through, and we pierced it yesterday, so you
Right.
can see how we broke that. Yeah. So yesterday we had maybe an hour left into the close. And if you go to a 4 hour chart, you'll
Look at
notice how
tagged it.
we were rallying and midday everybody's like, "Oh, look, we're getting a recovery." It was like the last hour, dude, the snot got slapped out of the market. We all looked around, we're like, "Wait, was there a headline?" There's no headlines. And it just reinforced how important that trend line is because we basically bounced all
Yeah,
day
right
yesterday
there.
into lunch, and then we slumped, and now we're consolidating below it. And again, there was no news. We were just sitting there going, it just shows you how important the technical levels are right now. And while we're below, that trend line, I think you have to stay defensive.
Yeah,
So
you do. You
yeah,
do.
yeah.
And so this would be a sign if we get back above it, great line, that maybe we have an all clear for a little while. We'll see. There's a lot of people saying this was two, this just, basically 24-hour rally from the last hour Friday to the opening Monday, and that three is underway. I'm kind of thinking that maybe the whole thing could be complete here. And, if bonds are starting to turn, maybe we get the growth scare goes away for a little while. But it's more because of my cynicism that, look, put buyers have made a lot of money. Okay. A lot of money over the last month or so, where the people, and I still think it's 60% bulls. But anyway, we could rally into OPEX and take away the put money. The put writers would love that. Maybe have it closed near a 6,000, so no one makes money if they held it to expiration. Just a possibility. I'm keeping in mind. I don't want to short Nvidia here. Um, Even though we had a little bounce, I think we could still rally up towards, up here if that scenario works. Apple, they're trying to break it down, but they can't. That's even with doubling the tariffs from 10 to 20 on China. I think Apple's going to challenge these highs, and if we get, it's not new. It won't be new highs, but if we get up there, I'm going to really back up the truck and short it, especially for their into option expiration, just above these highs for a corrective pattern, but underneath the high of the move. So 78.6 is here. We didn't quite get there. I'm thinking that maybe we will. So yeah, that I'm waiting for late March for 21st or so to see if we can rally the market for a few weeks and take away the put money. But what's amazing is Jim sent me a stat. I forgot the survey, but even with this decline, we're still at 60% bulls. So, uh, that means there's still a lot of longs to liquidate out. And if we get a rally, that'll give them hope. But this was pretty amazing drop. And
I'm sorry, I hate to interrupt here,
yeah,
Coach. There's some headlines from Lutnick, basically the Commerce Secretary.
yeah,
So
they want
it
to
looks like he's,
compromise.
yeah, he's commenting on Canada and Mexican tariffs, thinking about doing something in the middle is his comments. This afternoon, expect Canada, Mexico announcement, and Trump is thinking about doing something in the middle. So Canadian dollar just strengthened, Mexican peso just strengthened on the heels of that, and obviously we're getting a little bit of a bump in risk just as those headlines have come out. I'm just want to
Yeah,
update you as
yeah,
it's
yeah,
happening. Go ahead.
yeah. You got it. You need
Yeah.
All right. So
Shit,
metals.
headlines hit like all the time, all day long at
Yeah,
random times of the day. So it's like getting thrown grenades at, all day. So
yeah. Silver looks pretty good. The gold silver ratio might be rolling over. Silver got through 32. So, it looks all right. Maybe so that's, if we're going to have a rally in silver to, 34 or so, and the dollar is still weak and yields stop falling because maybe we're not falling apart yet. Who knows? Maybe it's the NFP. I think that you know a market rally would be part of higher silver. I mean, if silver looks good, I don't really see them diverging and having a nice rally in silver without some type of risk. And the other thing that makes me think that that might happen is the action in Bitcoin yesterday was pretty good. You had a higher low to buy right here. So I don't know, it could fail here, but this looks like, nice pullback and maybe we're on our way. We didn't get to 75 and this pullback and reaction was much better than the market, um, more like what the dollar's doing and silver's doing. So the hedges or alternative investments are acting okay, silver and Bitcoin. So I've never seen the market fall apart with silver going up. It'll be if the market falls apart, you would think silver would too. And you got a pretty good signal today. So I know go ahead.
yeah, I was just gonna say we got ADP in about 5 minutes or so.
Oh, okay. So let's try and get Ryan in. Ryan, you doing anything with currencies in here today?
You can say that, mate.
That's a
Is that
silly question, Dale.
is it?
Yeah. No,
His name is actually Forex Flow. So yeah, he's
Oh, okay. So you are. Let me ask you this, Brian. Do you have an interest in foreign exchange?
just a minor passing interest now and again, mate. If the weather's nice.
Yeah,
Yeah, I came into this week with some a bit of conviction on a couple of things, mainly around the tariff stuff, and
yeah,
I had one of those weeks where the conviction's okay, but the trade's looking horribly wrong, and you're wondering whether you're going to stay on the horse long enough to see it out. And I was in short in dollar max all the way up to 2098,
Okay.
and then boom, an absolute
Yeah.
lucknick
We
happened, and I managed to get some money out of that. And yeah, I managed to catch this break in euro dollar. At 105.30 went. I bought a
Oh
bit.
yeah,
And
that's right. It was this was your big resistance area, so Ryan style, we're taking it out. So you went with it yesterday.
yeah, and technically it was a dream. I've been saying at every one of those 105.30 tests, what it hasn't done after is
All
hold
right.
105. And this time we hit 105.30, dropped to
Yeah.
105, went through, came back, held 105, and then the rest is history, as they say.
Yeah.
So
Nice. You have a
where it
target?
goes,
Have you taken
um,
anything off here?
oh, I've had the slicer on all the way up to
Oh,
107.11 is my highest slice.
okay.
We've got the 200 DMA at 107.25, and I've also got a level up there as well. If we do plow on, 108.30.70 is a huge historical zone. I mean, I was trading this 8 years ago, that zone.
Oh, look at
So
this. So
it's
yeah,
a big one.
200 day is containing it, but I have a blue line here at 870 for some
Yeah,
reason.
yeah,
Must
yeah.
right?
I've got a zone 30 to 70, so right in there. You can go
Okay.
back years for that one.
All right, nice. Congratulations. So if you're in the chat room, Ryan laid it all out. So, that's what I'm saying. You can't just get the full potential of the team in 30 minutes on face. And you know what? A lot of things happen. Most things happen after face, besides when we have some news like we're going to have in a few minutes. So I'm going to let the charts go, Blake, if you want to get set up for ADP. I know Kman's here. Maybe we'll get to him after the number.
Yeah, or I can we can hear from him right now. It's and K-Man, good morning. Hey, by the way,
Good
just
morning.
real quick, if you guys are looking at data flash right now and you're like, hey, it's not working? It isn't. It looks like they have an internet connectivity issue, so we're running it into support here. But that's fine. We can follow the ADP data right here. You can see it right on ForexAnalytix. We'll be watching this right here. But K-Man, sorry, go ahead. How are you doing this morning?
Throw some more lines in there so we can't see the number anymore.
Yeah.
Yeah, that's okay. We'll scream it when we see it. So
Oh, that was a good one. That was good. I'm good, Blake. Yeah, I hope you too. I hope everybody too. So I think it's about a week ago. When I spoke here and with Dale that I was looking for that inflection point on the dollar. I guess we're in the midst of it. It's all a question about confidence, and the confidence in the US program is waning, and the confidence in the European program or other programs are on the up. So this is explaining a lot of those moves and explaining also why we are flying through technical levels that have held it back for so long. Will it last? That's another question. That's the next question. But for now, at least, we have to look at it as being a bit of a doubt about, call it global policies coming from the US and data. And the market, again, as it does every year, is looking for the data to weaken. So that's going to be our next point to closely monitor. Are those data going to tell us that the US is finally going to weaken? If we see the confidence data, it's yes, but now we need to see hard numbers.
yeah, the labor data. And now this the ADP is obviously this is the private sector. So,
Yeah.
everybody's focused right now on the government
Yeah.
jobs thanks to Doge. So this number is actually going to be pretty important today. And I think it's worth noting because if the ADP data comes in weak, people are going to be crapping their pants, and it's going to be in about 20 seconds. So I guess we should probably just go with that. Real quick, this is a 1 minute chart of the dollar index, so you guys can we're just going to keep a view of that. Obviously, on this chart over here, we have dollar, 10-year S&P, But I'm going to go back over here because the ADP, we're looking for 141,000.
177.
That is not good. Not good at all, guys. And the dollar yen is actually suffering. Dollar index is coming under a little bit of pressure. Yeah, that is not good data, any which way you slice it. So, and remember, this is the private sector employment. So now the dollar should continue under pressure, I would think.
Yeah.
What's your instant reaction here, Kman, since you're
Yes, I mean, completely agreed. It's a private sector, so we need to watch that. I am going to reserve my answer door for the immediate to the ISM because Besant and no, not especially Besant, but the whole Trump administration wants to deregulate everything in the US. And in theory, that should mean that the ISM services should actually be a bit better, I would say. And they're coming out in what, about an hour and a half, an hour and a half. And that could, if they disappoint, then I think the dollar could really get another slap.
What a move in euro pound.
Yeah, exactly what
Yes.
you're talking about right here. The ISM data
Yeah.
in 52.5 is what the market's looking for. The
It's been a little
prices.
weaker, but let's say that I wouldn't be surprised it comes out a bit on the strong side. This one maybe on the tip of my toes, but yeah. But and Dale was asking about euro sterling. I think it's the confidence in the euro coming back a little, Dale, and we see
Yeah.
those crosses. The market is now looking at the euro as finally collaborating more closely, getting their act together, ready to spend for defense, ready to put some programs in place, and that is showing confidence in the thing. You know,
That headline that came out from Germany yesterday about the spending really kind of goosed the euro yesterday, didn't it?
yeah, and that's what I was saying on the flow show as well. In a different era, more spending, more watering down of the government finances and stuff like that would have actually been a negative. But we are in a completely different scenario here.
Sure.
And you're speaking about trust in one or the other side of the pond and how the one and the others are handling stuff, and that is a big thing. It was, as we see, what happened on Monday and Tuesday is very, very telling. You saw when Europe and the UK started to collaborate, you saw the euro and the sterling outperform everything else. And then the market turned its attention to the dollar. Do we still have as much confidence? Was the question. And then came that euro thing, and then everybody was starting to buy euros, and I think that's about the three-legged move that we have seen so far. And yeah, now it's on to the data. As I say, if we get a bit weaker data this afternoon, oh well, I mean in an hour, and NFP showing also weakness, this move may continue, you know.
Yeah, and that's one of the things that we were discussing yesterday, and I'm trying to get back to the comments, and James is like, "Oh my God, that's like some big news." When that headline hit, it was like, "Holy crap, we got to be buying euros," and the euro just took off. I mean, it was it. And guys, if you're not in the ForexAnalytix chat room talking about this type of stuff, and that kind of went over your head yesterday, you should be here. It's $1 for 10 days, literally $1 for 10 days. Not only do you get the application, but you're also in the chat room talking with guys and gals like us that are discussing these topics all day long. It was a big, big, big deal yesterday. And yeah, so I don't know. Ryan, let me get your instant reaction to the data that just came out.
It's not a disaster. I was thinking anything, less than 50k or, even a negative number would have put the cat amongst the pigeons. Yeah, it's a weak one, but it's still a positive. I can't remember who it was. The central bank board, it might be Williams or someone. He was saying, I think it was 75 to 100,000 is his break-even marker for jobs. So, yeah, I think the market's already shrugged it off.
Okay,
Move on
all
to the
right.
ISM.
All right, fine. Don't be a party pooper this morning, Ryan. I mean, come on. We're looking for disaster. I want disaster.
It
You
did
understand?
nothing with yields. You know, the one thing that bothers me that this is more than a correction in the market is take a look at any financial stock like Bank of America, XLF, all of them. What happened in 2 days?
Yeah. There's your XLF right
Yeah,
there.
yeah.
Yeah, I
And
mean,
B of A is worse. It didn't make a new high. They have the biggest long duration book. That's why they're a target of shorts.
B of A is
So
BAC. Jeez, I
yeah,
had a brain fart there for a second. Okay, there we
look
go.
at
Yeah.
so
Yeah.
that bothers me. I think it was Dave H. Contrarian. Part of his bullish case was how the broker dealer index was acting, and that rolled over this week. XBD is the broker dealer. So we have the banks and we have the broker dealers, which were the strength of the market for the last couple months, taking big hits. That to me says they're worried about a credit issue.
Well, I mean,
Yeah.
is it, or is it just, correcting off the highs? I mean, after
Well, yeah.
having such a hell of a run, I don't know. I don't know.
Well, that's how they all look at the start. But
Right. Yeah.
yeah, I
It
mean,
all starts somewhere, right?
yeah, and B of A, I think, is not a great harbinger of the banking system if
All
they
right.
get
Yeah.
cracked. That's all. Just thought
Def,
I'd
def,
cheer everyone up and worry about your deposits. But I guess we're all backstopped, so it doesn't matter.
speaking of which, we happen to have Steve here this morning, and I remember when we first started putting together Forex Analytix and the Greek banks.
Oh
Remember
yeah.
Steve when they wouldn't let you pull out money, and it was a disaster over there. We can't hear you, Steve. Just in case you're trying to speak, you might have the wrong connection right now. So. He's trying because he's unmuted, so he looks like he's trying to say something. But anyway, that's a scary situation when you're sitting there going to your ATM or everybody's going to your trying to withdraw money and you can't, and you're limited to amount of money you can pull out. Anyway, well, we won't hear from Steve. Maybe we will here in a few minutes. Let's take a note that the euro dollar had blasted through really key resistance. We broke the 38% retracement yesterday at 105.75. I traded the euro on both sides yesterday. I sold it because I told everybody I was going to plan on selling the euro at 105.75. I actually took a loss as it was just so firm, and then I turned around and went long. So now you can see where we're struggling at the 200 DMA, but I think this is it's going to end up being a speed bump at this point in time. And Kman, you were mentioning about the services data, and how important it is. I agree with you, and I have to say that so many people have been, you know, I mean, I was just reading it as early as this week. There's all these traders calling for parity. We ain't going to parity, guys. Sorry.
No, that
Price
But now,
action price action has been very dominant bullish over the last several weeks. And if you've heard anybody say, "Oh, parity's coming," they can't read price action. Plain
you
and
don't
simple.
you didn't hear it here.
No,
they're all
hell
changing
no.
their mind now.
Hell no. We
They're all
we've been
changing
all
their
been
mind
very
now.
constructive in the euro, and now the euro is showing its true colors. So now you got a lot of people that are stuck short. All the bank analysts that are like, "Oh, we're going to see parity first quarter of 2025." Their quarter ends at the end of this week or end of this month, and there's no way in hell we're going to parity. I don't care if Trump slaps a shit ton of tariffs on Europe. Best we're going to get is back down to 105. So, what are your thoughts about the euro where we're going? Because I think we're going to 110. I think we're on a not a one-way shot, but I think we're going to be moving our way back up towards 110 level. What are your opinions here? Let's hear from you, K-Man. Then we're going to go to
Yep.
Ryan.
Yeah, I tend to agree. It's a bit dangerous now because also the option market is now completely flipping around and thinks 120. Um, but no, I think there's this move can really have legs because of the reasons why. It's not only the technicals, but there's sentiment behind, and we know that sentiment is a big driver. Ask people who have been trading sterling for a while. Sterling nearly purely trades on sentiment at times. So I think yes, that this can have legs. But again, what is different in a pure technical play compared to before is that we have still very fluid situations on the political side of things. And that's where we can have hiccups in this move. But I agree. I think, and I said it yesterday evening in the chat room as well. I think we have turned the corner. We have.
Yeah, I think so too. Ryan, what I mean, looking across the spectrum of the FX market, I mean, with the false breakdown in the Aussie, you got the euro that looks as bid as it does. Sterling, everybody's been trying to stand in the way of sterling, and that's because your country sucks and our country's great. I'm joking. I'm being sarcastic here. I mean, the dollar looks weak, doesn't it? I mean, how do you feel about the FX market as a whole?
Yeah, the dollar looks weak. There's so many plates spinning in the air. Okay, this rally against the dollar is a lot of things. It's tariffs. It's risk on the potential of a Ukraine solution. It's all this fiscal spending in Europe and whatnot. Um, we could get a Trump headline in the next 10 minutes where he says he's slapping 50% tariffs on Europe and we're back at 105 again. Am I still a buyer of the euro on the fundamentals in Europe? No. But we had a strong move in euro dollar from 112, pretty much one way traffic. And as we were saying, when it was getting down to the low, 102s, and then it stopped falling. And that's always your first signal of a market that may potentially bottom when it makes a low, then it can't get to that low again. Aussie dollar, that was different. That made a low, and everyone thought this is it. This is the bounce, and then it bounced a bit and then made a new low, and then we got to 64. And I remember Dale asking, is this going high? I said, not if it can't get through 64, and it failed, and then we came down 200 pips. So there's different speeds, there's different moves.
What about now, Ryan? With the explosion in euro and Aussie really lagging dramatically. Does Aussie? Do you buy this this higher low in Aussie, or could we see a 61 handle here?
Yeah, I think holding around that 62, it's confirmed. It's a step up off that prior low. Again, that's what you want to see technically.
Right.
So as long as we're holding that
61.8. Yeah.
Yeah, as long as we're holding around that 62 level, I mean, I would have liked to have seen another move down to 61.70-ish. But while it's holding that, it can bounce. But has it got the legs that we've just seen in the euro? Maybe not. So you've got to be very, very careful. Get above 64, different story. Maybe then it has its euro moment, and we get a quick move up to 66. But there's a bit of divergence coming now. All these pairs look the same, a month or so beginning of the year, and now they're all just starting to diverge a bit.
I don't want to be an alarmist, but new lows NASDAQ 100, new lows Dow.
Watch that 19 3/4, 19 and a half on the NASDAQ. Yeah.
I just want to say the market looks like shite.
NASDAQ is holding up a lot better. You
notice that? Kman had some views about the NASDAQ. What do you think about I mean, it looks like it's holding up better, Dale, but is it going to give up the ghost here?
I think 19 3/4, 19 and a half. That's where it has to hold, or are we going to get more unwinding of the Trump trade?
And Dale, what do you think? I mean, with Mag 7, really, I mean, Mr. Softy is Mr. Limp Dick Softy. I mean, it looks like crap.
I'm bearish, but tactically, I think there could be a rally into late March. We're either going to crash into late March, or it's going to give us a failing rally to sell into. I would say probably the odds most people would say is a crash. And you know what? I just want to mention one thing before I bring Jerry in. That we interview a lot of people.
Yeah.
And I would say, Katie Stockton was skeptical, but it still rallied to new highs before we got this break. But when we had Ben Maldonado on, he was spot on. He was early once before, I think in October, but he stuck with it, and his Rebel Yell was within 72 hours of a major high. And I know Ben got short. I just want to acknowledge with all the people that I interview, he was the most accurate of calling this top in the
Well,
S&P.
I'm gonna give you the biggest top call ever. One of my friends, it's trades. He does it, on the side, but he's pretty much the definition of retail. He faded, and he made money, but he faded the rally into all-time highs for the last 4 years. He was buying dips yesterday, and I'm like, dude, and I showed the text too. If you're on the morning edge, I actually showed the text messages between me and my buddy. And I was like, I said, you are literally going to fight this market the whole way down, aren't you? And he's like, I'm contrarian. What can I do? And it's the funniest thing is that was the first time he's ever been bullish over the last 4 years.
Can I tell you something? One of my best friends for a long time,
Yeah.
I've known him for 40 years. He has his own BD.
Uh-huh.
And he's been a bear for 40 years.
Of course.
And he's a bull now.
See, we have the same friend. Hey, what's his name?
He's a bull.
I'm just kidding.
I think it's because a lot of people are excited about the Republicans having complete control. They've never
Yes.
had this before. It
Yes.
makes them bullish about the
Yes.
market.
Yes.
How about that?
Yes,
Yeah?
I'm with
Okay.
you 100% on that. Hey, just one of the things, if you guys are Forex Analytics subscribers, you guys already know this. Euro Aussie is 161% extension. Keep an eye on that because it could give you some cross rate action pretty soon. But man, this Euro blowing up. I know you are bringing in your guest, Dale.
Sure.
I just want to say, guys and gals, it's going to be busy from here on out. Monday was a little slow. Yesterday was freaking dynamic, and the next few days are going to be berserko. So please be here every day on the F.A.C.E show. Tomorrow's we're going to have unemployment claims. We're going to have more data. Friday's the jobs report, Canadian jobs report, U.S. Jobs report, but Canada is going to be the 51st state of the United States. So we're all going to have the same jobs report on the same day all the time moving forward. I'm just kidding. If you live in Canada, I'm totally joking. But yeah, it's going to be busy this whole week. And the best place to be is right here on the F.A.C.E show. So thanks, Ryan and Kman. And by the way, if you're not listening to those guys first thing in the morning, you should be every single day. And Dale, is your guest here?
Yeah, Jerry's here.
Oh, Jerry is here. Okay, I didn't see him in the participant.
I'm trying to be, Jerry, please accept oh, there you go. You accepted. Okay. Yeah, Jerry is now promoted.
Oh, cool. And Steve, hopefully he gets his microphone fixed before we go on the morning edge, which is in 45 minutes from now. So,
hey, Ryan, great trading. Kman, great trading. Blake, team, for being there and getting our community long Euro before the explosion. Nice.
Thanks, mate.
Yeah.
Have a good one.
Nice work, guys. I mean, those moves don't happen every day. I really have a great guest today because, I've been talking to Jerry Robinson for a while everything's been really one way. So, Jerry, welcome back to F.A.C.E. I'm asking you to unmute. Yeah, good to have you, buddy.
Yeah, great to be here.
Yeah, gosh, I mean, since we last talked, we had the red wave, we had the excitement, in crypto and the market, going into January. Has the recent, it's really only been 2 weeks that the market has been under pressure, but it's given up a lot in a few weeks, although it was distributing for a long time. Knowing you're stalking things to buy on weakness. Am I on target?
Yes, well, and only because my time horizon is, 2040. I'm looking at, so I got 10, 15 years. I'm looking for those things that can really bring the best bang for the buck. And so, yeah, I mean, the near term stuff is weird. Yes, there's some problems here and there, but and we can talk about that, especially for the tactical traders who are out there. I mean, there's certainly things we see, but in terms of, are we worried about what this means for the next 5 years, 10 years? We're not worried at all. In fact, we like to see weakness because that helps our cost basis over a longer period of time. You see,
Yeah.
I'm of the opinion, Dale, that the big corporations that are out there, let's say the Exxons or the Amazons or the Apples, I've long said that these companies outlast the United States government. So that's why I don't buy bonds. I'm not interested in buying bonds. I'm not interested and you can see from the incoming administration, they apparently are trying to do something about the seismic debt issues that we have. We'll see. But overall, I'm of the opinion that these large multinational corporations, it's like the genie's out of the bottle. You're not going to shut them
Yeah.
down.
Yeah,
And you
they're really running things, aren't they?
they're running things, and they're going to be here when governments are not. In fact, some of them are already quasi governments, larger than some governments. So,
Real
so
interesting take. I've heard that before.
yeah,
Multinationals are running the show. The
right.
governments they pick the governments.
Exactly. So you look for the savviest of them. And for me, I think Buffett had the same idea for a long time. He scaled back just a bit, but for me, the smartest guys in the room for a long time were Apple. And if you wanted proof, just look how they navigated COVID. Oh my goodness. I mean, with the smartest guys in the room, bar none. But there were other guys as well, other, companies out there as well that navigated COVID very, very well. Others, blew up. They imploded because they didn't know what they were doing. They didn't have connections. They weren't large enough. They didn't have access to capital, blah, blah, blah. So my point is that we could have another COVID, we could have another crisis. We could have another world war. We could have all these things. But here's the thing. Some of these companies are going to navigate it better than you expect. And my hunt is to find those kinds of companies and to sit, and to buy them when everybody's scared.
Okay.
And so,
So
so
you
maybe
you probably love Tesla down here.
you
No,
know,
what
t-
let's show some charts, Jerry.
yeah,
And
let me
and,
get,
and yeah, and I wanted to ask you about, when you're talking about these corporations and
no.
long term that they're going to last. Do you hedge the currency in the corporations? Have you noticed? I know you've noticed dollar pretty weak. Looks
Yes.
like it topped out up there at 109 after the tariffs.
Hey,
We're
let's start
Go
there.
ahead. All
Let me
right.
get the dollar chart up. So this one, let's see, there's two here I'll look at. So, yes. So we are getting some relief on that dollar. It's back at the 200-day moving average,
Yeah.
which we haven't seen since, last fall.
Yeah.
We had this rally that kicked off in the dollar. You guys, cover this all the time, so I'm not going to belabor it. My point of view, my perspective was as the expectation for a Trump victory rose, which we began to notice in September, October, the
Yeah.
dollar began to rally. But that was the same, and I don't have a chart here in front of me. I wish I did. I would have had it prepped. I didn't think about it, but if you look at Trump's first term, it does the same exact thing. It rallies right into the inauguration. And then as soon as the inauguration is over, it begins to turn right back down. It's like an inverse V. And so that's exactly what we see playing out now. As people begin to see Trump's policies, it tends to pressure the dollar down. Another thing that we've been seeing that's been very helpful, and this has been the Trump strategy, has been to drive down oil prices. And if you'll notice, they are now, they did rally along with everything else, but then they began to come down, and we're seeing some real good price pressure on crude oil. And, that, of course, is a major input into the inflation print that comes out. We're also seeing a lot of pressure on, mint like wheat, for example, has had multi-day getting hammered, corn. I mean, a lot of these things. So all those are inputs, soybeans, all those are inputs for that CPI print or the PCE, whatever you prefer. And when we look at the USD, we can see it's falling along with bond yields rising because inflation is falling, and so what we've seen is a shift from the kind of the Debbie Downer on, okay, well, inflation's, here and it's never going to go away, to now suddenly, wait a minute, the economy is slowing. So we've kind
Yeah,
of
we
seen
have a growth scare happening.
now we got a growth scare. So it's moved from the inflation is never going to go away, it's sticky, to now, well, okay, it's going down, but now the economy is slowing down. Now, then there was said, well, the Fed won't cut more than they need to. They may only cut two. Well, we were saying at the beginning of the year, no, they're going to have to do at least three, probably more. And of course, as the growth scare continues, which we think it will, because if you look at some of the data, like the consumer confidence, the business confidence, consumer spending is down. If you look at the National Association of Realtors put out something about homes, I think it was for the month of January. We've never seen, since their data, they started keeping track of it, I think, at the beginning of the millennium, but at the beginning of 2000s. But they said, we've never seen this pour of home sales in a single month as they just recently did. So obviously there's the interest rates are too high to justify many people moving. So you have this kind of the growth scare. And then, of course, you have, President Trump breaking out the AK-47 and shooting it at allies and raising prices in the process. And so that's going to obviously be inflationary. So
what are we going to have? Which one?
Well,
you said oil's going down. That's going to tame inflation.
It
Tariffs
will.
are going in.
Yeah.
It's going to exacerbate inflation.
Trump is he is quite something, and I'm always cautious on how I talk about this character. Let me just say this. So prior to Trump getting into office, you nailed it on the head earlier. I was listening off air whenever you were talking briefly, and you had mentioned how politics drives the narrative, the investing narrative, oddly enough and sadly enough. And so when Trump was not in office, there were many Republicans, and I know because I have this followthemoney.com, I coach and educate and mentor, and people's politics was preventing them from participating in the bull market. Okay, so the bull market's going up, but President Biden's the Antichrist, and so you can't invest with the Antichrist, right. And therefore they stayed out of the market. Okay, so they've been waiting, they've been sitting in Dogecoin or whatever, and now finally that President Trump has entered and Biden is gone. The roles have switched. Okay, so there's a whole bunch of nervous Nellies who are saying, well, Trump is the Antichrist, and so therefore I need to get out of the market. And those who have been waiting are now getting in. So we're seeing a shift that is in addition to just the normal buy in November and sell in May. That normal rotation that comes, plus the annual rotation that comes, plus this strange political rotation that we have where there's this sudden new enthusiasm among Republicans and a sudden dismal dire among Democrats. They just switch roles.
Yeah, I was talking about a friend of mine who's been bearish his whole life because for the most part, Democrats have been the more influential party and never have they had control of the courts and everything. He's now a bull. And is happier on up days. I do have to say though that people that were worried about the market because of this election so far have saved a lot of equity if they did get out.
Yeah, well, yes,
temporarily. I know with you, yeah,
it all depends where.
2040, I haven't even thought of 2040.
Right.
Well, I mean, Jerry, 2040. I'm looking towards, March OPEX, the expiration in March.
Right.
Anyway,
so it's very, very near term. Well, and then of course we have the tariffs, and there's different views upon that. And our view is that, I think I agree with Warren Buffett when he says that, it's clearly a, it's a tax, and there's no way around it. I mean, it's just economics 101. And so the tariffs to me look like you can already tell because the Commerce Secretary Howard Lutnick came out yesterday and said, hey,
they want to compromise.
Yeah, we're going to compromise. So in other words, it's real tough talk. You're fired. The Trump, and then suddenly, well, maybe we'll do. And so, but guess what? When he does stuff like that, he gets more concessions. That's why he does it. You know that. So apparently, he got more stuff out of the deal. He's squeezing the lemon, getting all the juice out, and then he's like, okay, let's compromise. And so that's just something that you and I and the rest of the investor class or the traders and investors, we're just going to have to understand that that's how it's going to be, just like it was in the first term. Zany, crazy, wild, but also half the time not even real. So, but I think we've seen a lot of fear here. We've seen more fear since mid-February than I can recall in a long time.
All right, what are you basing that fear on? The VIX, because sentiment has not
Yes.
really turned bearish. 60% bulls still.
Well, I'm referring to the there was the AAII bull bear
Oh,
survey that they do, and that one hit the highest. I think the most bearish it had been since 2009, and I thought this is really strange considering that the stock market is still fairly elevated, and not
yeah.
even the S&P wasn't even below its 200-day. So you normally don't see that kind
Yeah,
of
the
fear.
bulls have been hanging their hat on that for a week while we've lost 300 handles.
Yes,
That you know what I mean? So
right.
sometimes the sentiment is right, but it is
Hmm.
unusual. I think it's the first time ever at a top like this you've had that kind of bearishness. Usually it's euphoric. So
Yes.
you're viewing that as a contrarian indicator. So what are you accumulating now, bro?
Well, you brought up Tesla, and I do like Tesla with a long-term view. I am concerned about, the whole way that
His
Musk
new job?
he's politicized his role to the point now where he just has has a stink, and I don't know how long it'll take. But people have short memories. If he moves on and goes something else, and 6 months it'll be something else. So Tesla is one area that I think is good. The Nasdaq 100 with a long-term time horizon, I like this. It's back at its 200-day. It's back at an area where it typically bounces. The volume is
Okay.
very large and rising, so I'm suspecting we're going to see a bounce. The,
You
the, the
buying cues here
uh,
today?
cons, can,
This break?
I tend to buy on the 200, so I'll be buying. I'll be buying this week.
Okay.
I bought here. I bought back here. I like that 200-day dip, and if it goes below it, it's okay. Because obviously things go up and they go down. They don't go up forever, and when they go down, from a longer term perspective, I get to get more. So maybe I'm slightly different from some of the traders in your audience in that way, where they would normally get out of the way. I'm willing to
Yeah.
to step in and buy, but that served me well over a very long period of time.
Right.
So
You're
that's just
you're
my
you're
yeah.
tough, man.
Well, I've seen a lot of it. I've seen a lot of, and I've seen a lot of the fear, and I've seen that a lot of times it doesn't pan out
Right.
the way that it's often portrayed that it's going to pan out. So let me get back to this. Go ahead.
No, go ahead, you Jerry.
Uh,
So you're scrolling through some of these things. Still bullish gold. It hasn't really done anything wrong.
no, yeah,
Uh,
gold. Let me see. I got gold. Where is my gold? Did I pass it? Let me go back up here. I think I did.
and silver is
Yeah, here it
kind of
is.
having a great day today, cutting through some resistance.
Yeah,
So
silver. Yes, silver. When we look out for 2020, we expected gold and silver to do really well last year. Because we expected the dollar to come down a bit. It really didn't do too
it
much
didn't.
in those terms. But gold and silver still
Yeah,
rallied. But
that was
and
impressive.
it was. We also continue to be bullish on gold and silver this year, especially due to that falling dollar. That's going to really help it continue to rise. And one of the things that we expect for gold this year is for it to hit around 3,200. It's a pretty
Okay.
modest rally, but at the same time, it's still pretty good considering how long in the tooth this rally has gone. When it comes to silver, we have more of a view that we're probably going to hit around the $40 level. That's our target. Of course, that's every opinion's worth whatever it's worth. But
That's a
our
nice
take,
move. Nice move.
yeah, yeah,
20%.
yeah, it really is, and I think it's a justified move because of the supply demand dynamic. So I think there's plenty of upside for silver, but these aren't my favorite
What are?
plays.
What are?
Okay, well I'll be frank with you.
Oil?
No, not so much oil. Let me move here to the crypto because it's really the crypto side that I'm extremely bullish on, specifically in 2025. So we've already
That
had
was
some
a
big
great action yesterday.
yes,
The breakdown, I know you're a technician. You probably saw that descending triangle
yes,
breakdown right under 92, and it
mm-hmm,
measured 75. And so everyone was looking to be a buyer at 75 in the bottom, when everyone's
yes,
looking for one number, uh,
yes,
doesn't get there or melts
right,
through it. So,
yes,
and then yesterday's action I thought was impressive, the way
yes.
it put in a higher low and everything.
Well, I mean,
So
Bitcoin to me is the most obvious and inevitable trade for 2025. I mean, to me it is and plus we've also shaken out a lot of the weak hands. We had a lot of
yeah,
folks who before the election, didn't know what Bitcoin was, but when they heard that Trump was
right.
going to do something, they piled in. So
Yeah,
we had a lot of new hands popping into Bitcoin, and
good
so
point.
then when volatility struck, these guys didn't know what to do. They'd never seen this. They said, "Well, this is volatile. Of course it is." So they began selling, and a lot of the
Yeah.
old timers were just held, and so that's why we're holding right now where we are. And I think we just flushed out a lot of fresh folks who came in because there was excitement around it with some sort of announcement around Trump. Well, this Friday, Trump is going to be unveiling, according to again to Howard Lutnick, the Commerce Secretary, who's been kind of leading the charge. They're going to be unveiling the crypto strategic reserve. And that I think is going to also lead to a pretty good, potentially a good rally in
Is it? Let
Bitcoin.
me ask you this, Jerry. Is it
Yeah.
going to be in a treasure chest? Are they? Come on, buddy. Are
Oh
they
my
going to do
gosh.
like a Geraldo Rivera unveiling of like Capone's big stash, and there was
Well,
nothing in there?
we'll see. We'll see.
All
But
right. Anyway,
but I fully expect Bitcoin to have a very good year. I think that you're going to see, right now with the uncertainty and the fear, it
yeah,
just doesn't seem like anything can go up anymore. It seems like, well, it's kind of over now. We're going to have these tariffs, and there's going to be a slowdown, and then, but one of the things that people are forgetting is that the Fed, has near about 450 basis points, to cut,
yeah,
and
true.
and they've
That's
got that's a lot of fuel. I mean, to overcome something, and believe me,
they will.
uh, they will. And guess who's been demanding it from day one?
Yeah, right.
President
So they
Trump
have the
wants.
cover. They have cover.
They have
You know,
cover, and
yeah.
right. So
Everyone's saying, well, how are they going to justify easing again and da 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 da. They have cover.
yes.
This is what President Trump is demanding. And anyway,
So
yeah, I could see that happening. But you know what I think is a trigger
hmm,
is going to be like 5,000 or 4,900 in the S&Ps
okay,
this spring or May, Mayish first half of the year, and then the second half of the year we have a rocket ship to new all-time highs because of
interesting.
what you're talking about.
Interesting. Well, that's an interesting that I could see that playing out that way too. I don't think it necessarily has to hold the 200 and move higher. I think you could have kind of a more of a flush out.
Yeah,
There is too much fear here. There's too many people holding that shouldn't be apparently. They need to sell. And so that we may get more of a flush. But Trump has a desire to see the stock market go up. We know that. We know that from 4 years of this guy. We know that he loves the stock market, and when it goes up, he loves to talk about it, and when it goes down, he doesn't mention it. So we know that, or he blames somebody else. But then we also know that he knows that stock market is really attached to his legacy. So in his mind, anyway, and so therefore he is going to want to see it go up. We have a Fed that has plenty of ability to lower rates to accommodate any of his craziness, and we also have Trump, who is really not doing half the things that he claims he's going to do in terms of punitive measures. And so, if we had a president who was someone who actually did what he said when it comes to these punitive measures and never compromised, and if we had a Fed that was sitting at 0% interest rates right now, I'd say we
yeah,
are we are we are toast. I mean, this is going to be rough sailing. But we don't have that. We have a president who likes to talk out of one side of his mouth and then does something on the other side, and it's good for the
yeah,
market. And then you
yeah,
have a Fed that has ample fuel to put up with it. So to me, I can see this thing going on and on. To me, the big crash, if I had to say, if you put me up against the wall and say, when's the crash coming? Do you believe in a crash? Of course I do. Of course I believe in crash. I've lived through them. I know we're going to have them. I know oftentimes they come through the stupidest things too. Mortgage-backed securities or whatever. You go through the list of the dumb things we do. Well, to me, my thesis is a little bit longer, is that I see that we continue a incredible bull rally through the end of this decade. And in some ways, it
Wow.
does somewhat mirror the 1929 crash, almost a self-fulfilling prophecy, if you will, where we run into the end of the decade really strong, and then we have to cope with it at the end. So I think there'll be a very, very, very sharp decline at some point at the end of this. But I think the AI
So yeah, so
fuel,
we're in
yeah,
the roaring 20s,
yes,
and we're
yes.
and we're and it's what, 1920 right now, or
It's no,
21?
it's 1920, it's 1925. It's
Okay, so
1925.
so we have 4 years.
Yeah, we're coming out of of course, Trump's going to do the same thing. He's going to rally the market and then crash it on the way out, just the way they normally do. And then you'll have a
Okay.
Democrat that comes in and cleans it up, just like we did last time. So this
All right.
is, this is the way that I see the pendulum somewhat swinging. And I could be totally wrong, but that's kind of how I position myself. I expect more upside, even some of it completely unjustified upside, just because of enthusiasm. And then eventually, you come to a place where you got to pay the tab, and I think we're going to
Yeah.
delay that as long as we can. We're going to delay the
Yeah.
pain as long as we can.
Okay. I tell you what, I really interesting interview today, Jerry, and I learned some things and some, great perspective and some macro stuff that I'm sure a lot of people they stuck around enjoyed. I say we take this interview out with "I'm all shook up." Your turn, buddy. You're better than me.
Oh
Go ahead.
no!
Come
What
on,
am I?
Jerry. Jerry does
Okay, let's see.
Elvis.
Let's see. Well, bless my soul. What's wrong with me? Come on now.
Yeah, you know what's wrong with you? You're not bullish enough.
Oh, that's true. Well,
All
I've never been accused of
right,
that.
all right, all right. Jerry, a pleasure. I hope this is a great year for you and
Yes,
everyone who
likewise.
follows you, and people that want to see your, like, learn to be macro.
Yes.
Just talking to Jerry gives me a complete different perspective. He talked in terms of years. And I just want to say I didn't. So if you're young and you're out there, you need to. You can't count on just, you know, um,
What happened
being on
next
a
week?
roll. Yeah,
Yeah,
being on a roll your whole life. And I've had a very long career, but it doesn't last forever. It's tougher to do. So you really, I just, laughed off all the financial planners that came to me in my
sure.
20s and 30s and 40s. Because,
Well,
so,
it's
I'm
understandable.
just saying, so I'm saying that, uh, like I teach trading, I want people to learn from my mistakes.
Hmm.
And that's why I consider it. I know in this world it's hard to think that long term because you always think these changes we're going through future shock. AI's next, Jerry. I don't know what that's probably going to be part of a bull market. I don't
Hmm.
know, but
Sure.
think more than your last quarter. That's
Yes.
what I'll wrap it with. And you have to listen to people like Jerry to change your mentality from a trader mentality to developing something that you're going to have later on.
Well,
So,
if I can squeeze in an addition to what you've added, because I think it's great. It took me a while to figure out my own approach, and for a long time, I viewed everything as a trader. I mean, it was just a trader, and so therefore, I wouldn't get married to anything. I was like, if I get married
yeah.
to it, then it ruins the whole thing. And so I would stay very, very, unattached. But over
Hmm.
time, I realized, okay, what I'm going to do is I'm going to create I'm going to have two hats. I'm going to create a basket of investments that are long term that I really believe in, have conviction on, and then I'm going to have my trading. And what's so hard? It's very difficult though because you got to take off the trader hat to put on the investor hat, and then you got to take the investor hat off to put the trader hat back on, and that's challenging. It took me years to
It
figure that
is.
one out because I would
It
trade
is.
my investments and I would invest in my trades, and it was like, oh my gosh,
We've
it
done,
doesn't. Yeah.
we've done it all. We've
Right.
we anyway. That you can't learn experience, Jerry.
Yes, true, true. Well, if folks want to learn more, followthemoney.com. And I was just thinking when you mentioned that, we put out a weekend report called the Robinson Report. It's right here. And there's a page that I just wanted to show in conclusion. Well, we do lots of charts and things like that. But what we do is we track the trends. So that's what we've been doing now for, well over, I guess, about 15 years now. We track trends. And so we have the long-term trend for those who are more interested, in long-term investing, position trends for those who are position traders, and then the swing, which is much more near term. And so we track many markets and we track those trends. We have a trend trading software that people can type in any stock, any crypto. They can see what the current trend is. And so this report comes out each and every week. It keeps up with many different markets, and it's good for traders and long-term investors. And so, for anybody out there, we're not just catering to long-term investors. We do have lots of trading tools. It's just that me personally, I just tend to, at my current age, I just tend to focus more on the easier, longer term investing, not the intraday grind. I respect you for being able to do that because I know how much mental resources, that it takes. I know that it's challenging. So it's very, very challenging.
Well, I feel it.
Yeah.
Anyway, Jerry Robinson, everyone. Thank you, Jerry, for I'll see you in May.
Sounds great. Look
All I
forward to
could say, all I could say is the king is ready to leave the building. All right. Jerry,
All
thank
right.
you. And everyone have a great day, great trading day. Remember,
right.
don't just count your long term or trades, count your blessings. And, money comes and goes. Time is gone forever. Make it count. So that's a wrap. Good luck. You could join the team in 14 minutes on the Morning Edge. I'll see you, Elvis.
See you later. Blessings, brother.
All right, buddy. That's a wrap. Adios, everyone. Thank you, guys.